maybe we can just kick off with a conversation about this crash where we are right now, down at 106, and what happened, just the absolute carnage that happened with crypto that day. And this is I was trying to find a great image or visualization of what happened to the crypto landscape, and I had one in mind, but I couldn't find it. This one is great, but it is about I don't know, probably not quite at the bottom of what actually happened. And all of these are, in the like 30, 40, 50% drop range, but a lot of them went down 60, 70, 80, 90%. This was obviously earlier on what happened, but it's still, the visualization still applies. Everything was down an insane amount in crypto. Bitcoin went down about 10% by comparison. So, gentlemen, what do you guys think about what happened here? We're down at 106 now. People are wondering if, we got that double top similar to what we did last time. Both got up to 124, 125, 126 twice with a few months in between the double top. And that was the end of the cycle a few years ago. Now we're seeing a similar price action here. There's talk of price suppression, and there's talk of insider trading. We've got that one huge, massive short where someone ran away with $180 million. The common and fun speculation is that it was Barron Trump who made this happen. And who knows? Maybe it is.
It's always Barron. It's always Barron.
It's always Barron's like whispering in his dad's ear, Dad, tank it. And the timing was impeccable, right? Because it was like the short was placed literally like a few minutes before Trump's tweet, and then a couple of days later, Trump, kind of reverses course on that tweet, and the market goes back up. So maybe Barron was satisfied with his $180 million. Actually, don't know if it's Barron or not, but it's fun. It's fun. What do you guys think? How did this thing make you feel? Did you have any visceral response to this? I mean, I was like, I'm just so numb to this stuff now, and it really just didn't bother me. I was like, fine, even if it is a double top and it's over, fine, whatever. It's just, it is what it is, and you just roll with it. What do you guys think?
I'll start with a quick one, but I want to hear from the other guys. I saw a great clip resurfaced of Saylor talking in 2024 about, imagine a guy who's trading Apple stock at like a price of $1.25 to like $2.70, and like getting all worked up about all the moves from that dollar price to this dollar price. No, I got in, I got out, and I can't believe my portfolio went down by this much. And Saylor's like, you just want to shake the guy and say like, none of this matters. It doesn't matter. That's how I kind of feel about this stuff. Obviously, for any investment, Bitcoin included, if something happens that shakes your thesis, like a total game changer to the reason you got in, then you have to evaluate that. You should always be evaluating those things. But I think it's safe to say the thesis is intact. Literally nothing has happened that has changed my Bitcoin thesis. So the fact that the price went from, what'd you say? It was October 6th was a Monday, 2 Mondays ago. We hit an all-time high of roughly 126K. That Friday, we started falling and kind of have been falling since then. None of it changes my thesis. Obviously, it's interesting to talk about the headlines, but the thesis is intact.
Yeah, I would definitely echo that. This hasn't shaken me personally. I was around for FTX, and I've seen a lot bigger drawdowns than this. And it's like John was saying just now, if you kind of just zoom out, and I know we say that all the time, zoom out, but looking at the 5-year chart, like we're up 834% in 5 years. Very, very few investments do that for you. Short-term volatility is part of the game. I think what happened was probably spurred by the tariff thing last Friday, and then got worse and worse as a deleveraging thing. A lot of leveraged longs were liquidated. Fear and greed index for Bitcoin's like 22 today, so lots of fear. Goodbye time. That's my view.
If you think that the top is in, I have some oceanfront property in Arizona to sell you, is what I would tell you, from my friend George Strait. And I've talked about on this show that I would be in the camp of more volatility than less. So it should be expected. And I think the folks that continue to say like, hey, volatility is going to be squished and like it's going to be this like slow grind to whatever price that someone wants to throw out there. I just don't think that happens. I think Bitcoin still can move and move aggressively. I still think the skew of the volatility is to the upside. So similar to everyone else, unshaken, because I think John was very smart to say it. Nothing's changed with the thesis. I look at gold and I'm like, yeah, that's what Bitcoin's going to do. Likely in 26, in my opinion, is going to fall into that move. And there's just some really interesting things going on in that market. And a lot of the thesis for the gold and silver and other kind of metals and rare earths moving the way that they are is, people are waking up to this like hard asset over financial assets. And then the other thing is, for those that are familiar with the Mayer multiple, which is kind of just a sentiment indicator from that standpoint that I personally like, is just look at the current Bitcoin price over the 200-day moving average. If it's sub 1, you should probably be buying Bitcoin. It's good to maybe increase your DCA, good lump sum. We're sub 1 as we're recording this, so that's typically a really nice time to buy some Bitcoin. And the average for Bitcoin over its history is like 1.3. So, we're at a good spot to continue to acquire. I don't think the story's changed. We'll talk about it more, but the Fed is giving up a little bit and saying, hey, we're going to ease. We're going to cut interest rates. Like the kindling for Bitcoin and risk assets to do well is still there. It's good to get a liquidation event in there and get people kind of wiped out that are doing some things that are foolish. But if you buy Bitcoin, you hold it, you don't use leverage. These are just moments that you can add a little bit as you're able. And I think that's a beautiful thing historically. And if you give yourself 6 to 12 months from now, you'll probably be really happy that you're acquiring at this level.
Let's take a look at, I've never done this before. We look at a lot of charts, but I've never brought up TradingView before. This is the 1 week chart. So each of these bars is 1 week in the price of Bitcoin. And you can see here that we're not, even to combine these two, we've had in March of 25, in July of 24, and there's a few more here too. Bigger weekly drawdowns than we've had this past week. We are down less than 10% on the week. I'm looking at the Swan app here, which is a great chart. We are down 8% on the month, up 58% in the past year. That's 15% year to date, and then up 838% over the past 5 years. So this is some typical stuff. And here's the monthly chart to look at. So stop the screen share. Hold on one sec. This is the monthly chart looking at, here we go. Longer view going back to 2015. This includes that 2016, 2017 run. And you can see it's a tiny little red spot over here. And we've had much bigger monthly drawdowns. We've been talking a lot about, lower, drawdowns, right? Like 30% sort of max drawdowns, moving toward that because we have so much institutional and professional asset trading and accumulation and management services, companies that are into the space now. There's a lot of sort of built-in DCA beyond just the retail and the Bitcoiners DCAing. These are going into portfolios, retirement portfolios, and investment. What is the word I'm looking for, John? Just investment products, where Bitcoin is kind of getting passive investment into the network. And we'll see here. We haven't even come close to that. That would, we'd have to go down. I guess we're somewhat close. Where are we down? 20% from the top? Is that right? 18% from the top?
Yeah, I don't think it's quite been 20 yet. Yeah. So it's not even considered a bear market in traditional finance.
18-ish% from the top. So we'll see if we go down another 12, 15%. We're going to be flirting with my thesis that we're not going to see, more than a 30 or 35% dumps at a time anymore. So maybe we'll get to test that out. We'll see. Scoop up some cheap sats.
One other comment before I forget, which is prone to happen. When you pulled up the chart on just crypto in general, there was like no bid for so many of those assets. And people that actually manage institutional capital or big pools of capital see that and they're like, yeah, this is uninvestable. And then you look at Bitcoin and the way it responded. And I do think that there's some signal there. And that does catch the attention of folks of looking at, yeah, there's volatility, but it's extremely liquid and it's not going basically no bid like a lot of those things did. So right. I think that's an interesting point.
Yeah, good stuff.
I'll just add, I just to be a little more definitive with my current view. I appreciate that Isaiah was more definitive, where he's saying this is not a top. I'm in that camp as well. I would liken what's happening now much more to what was happening last year. If you guys remember, after the ETFs came out in that initial fake out, then we ran up to 70K. But then throughout the year, we bounced back and forth from like 58K to high 60s, 70K, like 5 or 6 times. And then obviously later in the year broke out to 70 again, 80, 90, 100 for the first time. So that's what I kind of liken this to. I don't read too much into trading within like a 20% range. There's reasons in the market that things are volatile right now. But when I think of like cycle tops, let's just list off a few things that were happening at the last cycle top when things really started to roll over. Highest inflation in 40 years, fastest Fed rate hiking cycle ever. Crypto collapses were being uncovered one by one. Terra Luna, Celsius, Voyager, BlockFi, FTX.
Oof, that was rough.
All of these things are happening. The S&P is down 20% on the year roughly in 2022. The Bitcoin ETFs did not exist. BlackRock was not singing the praises of Bitcoin. That was the environment that caused us to have a blow off top and a terrible year of performance after that. I think things today versus everything I just listed it's totally night and day.